And we are live. Oh, I should probably unmute in the Discord. All right. Hello, everybody. It is Tuesday, June 7th, 2022. This is the weekly Win Soon show with Cal, all things Leo Finance, Cub, Polycub. And as per the usual, before we actually hit the live button, we were talking about all kinds of things that you guys might want to know about. So Cal, why don't you give us a recap of the last like 10 minutes of plans for Cub? Because Cub often feels like the forgotten stepchild because all the focus is on Polycub right now.
Yeah. Yeah, I mean, that's the cool thing that we're doing right now is basically we've spent so much time developing Polycub and all the contracts behind it. And now is kind of the crunch time to implement the different contracts. So the cool thing now is seeing all of this stuff roll out for Polycub, and then obviously migrating all that stuff over to Cub in kind of one massive one fell swoop. So when it comes to like things like vexPOLYCUB and PHBD and pHive, I think we're seeing a lot of success with that model. And kind of taking that success and then pushing it over to Cub is going to be kind of what Cub has been waiting for, which is basically a massive round of updates all at once. And there's a couple reasons why we're doing it that way, but essentially what we were talking about before is before we got on is Cub's basically reached a market cap of 600,000, which is crazy low. We were talking about the inflation rate and the model for Cub going forward. And, it's what we're thinking is, and obviously this can all be put to governance, but what we're thinking is with Polycub, we've got this model of protocol and liquidity and soaking up capital for that protocol and liquidity. So, as that protocol and liquidity grows, the treasury can leverage it to generate yield. And then it uses that yield to buy Polycub, and that's where the long-term LP incentives will come from. So essentially the platform will be buying Polycub on the market and then distributing it to that LP pool. And then from that LP pool, that's where all the liquidity pools get paid APY from. And then obviously the governance votes every week will determine which vaults get the most of that yield. So it kind of creates that built-in utility there in the long run. And what's cool with Cub is that right now we have a buy and burn model. So with kingdoms, which is the only way that Cub accrues value, which up until recently was the only way that Polycub accrued value, but we realized that we needed a more sustainable model. Cub accrues value from those kingdoms, and then it takes that value, buys Cub automatically, and burns it. So if you watch that Cub burned number, it goes up over time. But obviously from management fees, the same thing we learned on Polycub is that it's not buying enough, right? So what's going to be interesting is seeing that we implement BHBD and bHive and xCub and all these different contracts, collateralized lending, and governance voting. And once we implement all these things, seeing that number of burned Cub go up and seeing that kind of accelerate. So we'll basically have two models. We'll have the Polycub model, which is the inflation happening every month on that kind of accelerated Bitcoin cycle. And then, protocol and liquidity taking over, buying Polycub and redistributing it to LPs. And that's kind of the Polycub model. Then we've got the Cub model, which is going to be, that set inflation rate of 1 Cub per block. And then earning from all these different methods, bHive, BHBD, xCub, collateralized lending, and taking all those earnings and then buying Cub automatically and burning it. The same model that's implemented now. So I think it's going to be pretty interesting to kind of compare these two models and see how they perform next to each other. And essentially just kind of like it's almost like two experiments going at the same time, and we get to see, okay, this is what a long-term inflationary buy and burn model looks like. This is what a long-term deflationary buy and redistribute model looks like. and then we've got those two DeFi platforms going forward. And to us, the overall mission of LeoFinance is democratizing, financial knowledge and access. So with Cub, we created that for the first time with our community, which is, you can go out to this other blockchain and basically create all this value. Then with PolyCub, we extended that branch again, and basically we're looking to, we're looking to push that forward in the long run. So one thing I've been following pretty closely is this curve idea of, which is what a lot of curve people are talking about on Twitter, which is that cash flow life, which is, they're buying curve and they're staking it and they're getting long-term cash flow. And obviously there's a lot of calculations that people put into figuring that out. I know Gerber does a lot of stuff with curve and staking CRV. But when I was reading that stuff, I was really thinking about what the long-term vision of Cub and PolyCub is and kind of has always been, but we should refine for the future. And that is that the cash flow life where, everyone on LeoFinance has a place where they can stake their crypto and securely, reliably earn yield in the long run. Because there's plenty of platforms out there, but just look at what happened with Luna and UST. And plenty of other, there's thousands of DeFi platforms sitting in the graveyard. So looking at those and kind of trying to figure out what we need and want for the future of our community. I think it's I think that cash flow life motto is kind of what we're going for with Cub and PolyCub. And obviously we're in this experimental phase where we're looking for that long-term sustainable model. And judging by the figures around P-Hive and PHBD, I do think that we've reached kind of this really cool model, especially with the X governance going into place. What was that, like 2 or 3 weeks ago? I do think we've reached kind of this sustainable model, and it's going to be something to closely watch as we kind of watch it unfold.
Do you have any numbers on that? Like how much in terms of, to the protocol, how much is being brought in the last, week or month or whatever for all the V2 stuff?
Yeah, so that's a good question. So I do want to have PolyCub start to put out reports on like the exact figures coming in from each pool, but essentially, from HBD. So from HBD, just looking at that one specifically, there's about 140,000 HBD staked by the Oracle, and that has earned, I believe it's earned about 4,000 HBD so far. So that's 4,000 HBD for the protocol, just from on-chain staking. And obviously it's staking it at that 20% APR on the Hive blockchain.
But then there's all the bridge fees and the arbitrage.
Right. So then where it gets more complex to calculate is bridge fees, which is 0.25% going in and out from wrapping. And then you've obviously got the arbitrage, which I think the arbitrage is going to be probably the bigger number out of all of them, which is obviously, the protocol transacting PHBD and HBD to arbitrage the price back to peg it basically to the internal market. And then actually the interesting arbitrage has been the P-Hive arbitrage, because obviously that P-Hive price is a lot more dynamic because you've got the Hive price constantly moving. Then you've also got the PolyCub price constantly moving. So the price is basically super fluid. And then, all that arbitrage volume is already very valuable, and it could be extremely valuable if you see, that P-Hive pool reach, $500,000. I think it's at like 200K right now. So that arbitrage volume is huge. And then, kind of tying this back into what we were talking about with Cub, when we have BHBD and B-Hive launched, you're going to see a lot more arbitrage, just because then you've got those 2 new pools on Binance Smart Chain. And what that brings for both PolyCub and Cub is kind of this synergistic relationship where, when the B-Hive price changes, the protocol or any user can arbitrage B-Hive by, say, buying P-Hive on Polygon, unwrapping it to Hive, rewrapping it to B-Hive, and then selling it on Binance Smart Chain. And what that creates is arbitrage volume on both sides. it also creates bridge fees for both Polycub and Cub simultaneously. So I think when those figures start to come out, especially when you've got the dual pools going on both blockchains, it's going to be it's going to kind of blow people's minds in terms of how much value can be generated from these vaults, and we're calling them V2 vaults because they're completely different than, you know, if we have a you know, like for example, we have like a Polycub Bitcoin vault. A Polycub P-Hive vault is a lot more valuable than that Bitcoin vault because of those value accrual methods that we've talked about like 10 times on the podcast. But
so a couple things come to mind with that. So one is that you know, it's hard to, like with the arbitrage. So if you go from let's just say P-Hive, right? So you got P-Hive Polycub arbitraging against Hive on Hive blockchain. When you add a third node to that with Beehive Cub, then you know it's a network law. You know, so it's not just that you increase by one; it's a square of the difference. You know, so you go from 2 to 3, which is actually like a 4 to 9 kind of relationship. So it should more than double the actual arbitrage volume between that's already going on, which is great. And you know, I just had this idea as you were talking. It's like, well, what if you know, so the protocol on liquidity is doing two different things, right? On Polycub, it's going to buy Polycub off the market, you know, once the inflation is essentially done, and then it will distribute that to, you know, the various vaults and things on. And then on Cub, it's the buyback and burn model. Well, personally, I like the buyback and burn model better, simply because you know, you're creating buying pressure and then zero selling pressure because you've burned it. It's no longer in the marketplace. Whereas, you know, when you distribute it, like in Polycub, then, you know, some percentage of that, probably a large percentage of it, will then be sold back into the market. And, you know, so the net gain is going to be the difference between those two. And I think there will be some, but it's not as definitive as in like the burn model. So I was thinking, it's like, well, how do you balance those two? And one idea would be, so you take those buyback methods, whether it's Polycub or Cub. It's like, well, maybe you could do something like you look at the market cap of each coin and you buy back the one that is lower until they reach an equilibrium, and, you know, raise both markets together. So you know, I don't know if that would actually work, but it's just, you know, something that just occurred to me.
Kind of like if you combined them and created like a super Cub.
Yeah. And you know, as other Cubs are launched, you know, if you're still planning on doing the Avalanche Cub and the Phantom Cub and whatever, then, you know, like the entire suite of Cub universe, or whatever you want to call it, you know, could rise together rather than having, you know, huge outperformance on one and then, you know, lagging other things. So something to consider. Because, you know, one of the things I like about doing the show is that it reminds me to go in and claim all my stuff on Cub and Polycub every week. That's what I was doing as you're talking, just going through my ledger, confirming everything. Because you know, there's a way to check, right, on like what the next unlock date that you have is.
Yeah, you can check on the contract. It's a little bit of work.
Yeah, because I think I'm coming up on like 3 weeks since we made the shift. I haven't claimed anything since we switched to 30 days. And so I think we're getting close on that. There we go, read contract.
Nice.
So I'm looking forward to those starting to come unlocked.
That scenario you just pitched, I'm not even gonna attempt to put into the when soon show recap, because that was just way too much, way too fast. But I like it.
You know, just supporting, no Cubs left behind. You know, that's the
there you go. Yep. I love it. No, I'm gonna start that meme. No Cub left behind.
Nifty Phil thought you were just a mannequin with you're being so still.
Yes, it's because I was typing up. We were like 5 minutes in, and I'm like, oh yeah. I was like, maybe I'll do a when soon show recap while we're So then I was playing catch up while I was listening.
Yeah, very handy.
Hey, listen, it's wins everywhere. People that can't watch the show get the recap for at least most of the points we talk about. And it keeps me at bay and not interrupting with jokes all the time. So wins all around.
Yep.
We'll let the smart people talk.
Yeah. So, overall, I think so, before we went live, Cal, you had made the point to Mitch. So Mitch was talking about like maybe we cut the inflation on Cub, once X Cub is a thing, we can do governance votes and all that kind of stuff. And he said, well, maybe you don't want to cut the inflation because then that limits growth incentives. And this is a point Edicted has been making for years about how everybody's focused on deflationary tokenomics and how he thinks that's a mistake. So you were making kind of a similar point there. And I think it really comes down to what that feedback mechanism is. So like in the burn mechanism, I think it makes way more sense to keep inflation higher. But then if you're doing a redistribution, then keeping inflation lower is better because you're going to have lower selling pressure over time with less inflation. So all kinds of.
That's a good point. I mean, like, because if you're in a buyback, like you said, if you're in a buyback and burn model, then it really doesn't make sense to do so. But if you're in kind of just like a protocol and liquidity world, it's like, well, okay, you almost kind of need to be able to create the rewards, to distribute the rewards, because you just don't have those tokens being created.
Right.
So
yeah. So Cal, I mean, question on you on like the macro point of that is that, so we've seen all the ohm forks kind of destroy themselves over the last few months. Has that changed your mind at all about how these models are going to work for Cub and PolyCub?
No, it hasn't. I think with PolyCub's protocol and liquidity strategy, I'm very confident in what we're building and what we've built so far. In terms of the way this is going to work. So obviously you've got all those value accrual strategies kind of feeding back into the protocol and liquidity. So you've kind of got like this base income if you look at the protocol as like a revenue generating business, right? You've kind of got like this base income that comes from, wrapping fees, arbitrage, on-chain staking. You've kind of like, you got this baseline, right? Then above that, and if you kind of zoom out, the whole point of the protocol and liquidity is to generate a return that can be, and that return is used to buy PolyCub and then redistribute that as LP incentives, right? So if you want to pay an average of, and I actually talked to Addicted about this recently, if you want to pay an average of say 20% return to all LPs across PolyCub, right? And obviously that's going to look different because you've got the X PolyCub governance, which may say, okay, we want, the PSPS vault to earn 5% and we want the PHBD vault to earn 35%. And Neil doesn't like that. But you've essentially got this setup where, let's just say across the platform, the average return is 20%. And in order to do that, let's say that you have $1 million LP'd on the platform, you basically need that protocol and liquidity to generate $200,000 a year in order to buy that $200,000 worth of PolyCub and distribute it back as LP incentives. So, where this model starts to get interesting, in my opinion, is not where you say, okay, there's $1 million in protocol and liquidity, and it's generating a 20% yearly return, and it's paying back that 20% yearly return to LPs who have $1 million on the platform. That's kind of like, 1 + 1 = 2, right? And that's not super interesting in terms of a DeFi platform. What you really want is exponential mechanics in play, where the protocol might have $1 million in protocol and liquidity, and you don't want it to just generate 20% a year. You want it to generate, say, 40% a year. But how do you generate a 40% yearly return, consistently? And that's kind of like the eternal investors problem of that they're all trying to solve is how do you beat the S&P? How do you generate a good return? How do you generate alpha? I think the protocol does this in a super smart way, which is that it has the protocol and liquidity. Then it leverages what's in the protocol and liquidity to generate different things like collateralized loans, synthetic assets. These are kind of all baked into the long-term model, which is, you know, the protocol might have $1 million in protocol and liquidity. And then it's LPing those assets on different platforms to kind of bring in a yearly return. And then it's issuing things against those assets. So it's almost like borrowing. The protocol is almost like borrowing from the community in order to generate a higher return. So imagine that there's like $200,000 in USDC held by the protocol. The protocol could LP that $200,000 and then essentially take a synthetic asset loan against that, or it can loan out synthetic assets to users. So all this stuff it kind of gets into the weeds of you know, the long-term vision that I've had for PolyCub, but essentially what we're looking to do is spin up that protocol and leverage it to generate a bigger return than you know, just like a basic, you know, 20% yearly return on, say, $1 million, which could then lead to $1 million being LP'd on the platform. So that's where I think things get interesting, is that the protocol essentially has more leverage than any normal user could have in DeFi. And the reason for that is because the protocol controls things like PHBD and Phive, and obviously its own liquidity. And then you've got bonding and the collateralized lending vaults. I think Addicted is most excited about the collateralized lending model, where people can stake their xPolyCub and take a loan against it from the treasury. And then when or if that position gets liquidated, the protocol actually takes that xPolyCub and it sells it through bonding. And he's just kind of interested in the game theory mechanics of how that's going to work.
That's actually also what I'm excited about in terms of future, the collateralization and we have to borrow against. I mean, that's called more ammunition, more powder.
Yep.
Give it to the cat. He's ready.
Well, and if you want to look at kind of one of those other features that we're getting ready to launch, is I put it in the title of this podcast, which is vexPOLYCUB, and I kind of explained it, I think, on the last AMA just a little bit. Essentially what that is it's voting escrow xPolyCub, which sounds way more complicated than it is. Basically, it's a locking contract where you can lock your xPolyCub for 2 years and then use it in governance votes. And if you lock it for 2 years, you get exponentially more governance power than someone who just is holding regular xPolyCub, which is obviously instantly liquid. So you'll be able to stake your xPolyCub for loans. You'll also be able to stake your vexPOLYCUB for loans.
Yeah. You know, obviously we have to see the details, but it is interesting. So, like, you know, with Curve, you know, they have their VECRV, which is the voting enabled Curve token. And one of the more interesting things that has been done with it is you have a platform like Convex comes on as a second layer to CRV. And so they have a method where you have CRV, you lock it with Convex into their pool of CRV. So you join like it's like a mutual fund of CRV kind of thing. And then they give you their token in response, and they create a market between CRV and their token to keep them, you know, to keep liquidity between them. So, you know, the goal is always to find like a no downside kind of scenario, because, you know, giving up liquidity for 2 years or 4 years or whatever it is, you know, like is basically forever in DeFi. And so, you know, there's always that big hesitancy to lock up your tokens like that, because, you know, in 2 years it could be zero, you know, who knows. But if somebody can come along and solve that liquidity issue, then with like an instant staking kind of model, then that becomes a lot more attractive. But you know, if it's something like, oh, you have to lock it in order to get a loan against it, so like regular xPolyCub wouldn't be eligible, then that might be more incentive, something like that.
Well, when it comes to the collateralization and the borrowing, is that going to be what it is? Is it like a huge long lockup period, or is it just basically as long as you hold the loan and you can get liquid if you pay it back? Or
You
Yeah, I'm
can
just making
get
stuff up.
with the xPolyCub loans, you basically, it works exactly like if you've ever used like a MakerDAO vault, for example, or Aave. You basically lock up the token, so it's xPolyCub in this scenario. You lock up xPolyCub in a contract, and the contract pays you, say you lock up, $1,500 worth of xPolyCub, and the contract gives you $500 in like a PHBD loan. Now you've got your $1,500 worth of xPolyCub locked up, and then you've got the 500 PHBD liquid in your wallet. You can do whatever you want with that 500. As soon as you pay it back, you get your xPolyCub back, and you can do whatever you want. So it's not like a lockup of any kind in that scenario.
cool.
I'm just, thinking about like, how much incentive is just governance. I don't know.
It's some, but I mean, I've obviously like that whole like I forget what you were going to call it, but lock up xPoly for 2 years for additional governance. Like I would probably commit something to that, but it's going to be like a minority of what I hold. But I still just want to have a little extra say in voting matters.
Yeah.
So I
Well,
can
one
basically
thing,
vote against the SPS.
yeah.
How dare you?
Just to battle Neil.
One thing that
Shaking fist.
one thing that we're considering is, and this obviously would ironically get put to a governance vote, is what if, and this goes back to that kind of the mission of the platform of PolyCub and Cub, which is that cash flow life and generating a long-term return that's stable, reliable. One thing that we're considering, which is kind of similar to how Curve works, is if you took the yield from the platform, so say you took a certain percentage of the yield that's generated by the platform, that's obviously generated by that protocol and liquidity in the long run, and instead of paying yield to xPolyCub holders, the only value prop of having xPolyCub would be voting on governance, but also having your PolyCub be liquid. Then you would take the yield and distribute it to the vexPOLYCUB holders. So say that if you lock your vexPOLYCUB, obviously you're locking your xPolyCub for 2 years, and then a return is set by the governance, which is say like 10%, right? So 10% APR on staking vexPOLYCUB, plus you have that huge governance incentive, which is, your governance votes are worth, 3x what an xPolyCub governance vote is worth. And you basically lock your vexPOLYCUB knowing that you're going to earn 10% a year no matter what, plus have that say in governance. This is kind of similar to the way that Curve works, in that, people are playing this game where they buy Curve at a certain price, and obviously people have all sorts of calculations for this, and then they stake that into vCurve, and they lock it up. And their expectation is, based on, trading volumes and other sources of revenue for Curve, they're trying to predict how much APR they're gonna basically earn over the long period of time. And then obviously it gets more complicated when you start looking at things like convex and those second layers, and kind of like the governance bribing that goes on with Curve. But that's kind of something I've been toying with in my mind, which is if the yield is actually paid out to vexPOLYCUB holders instead of xPolyCUB holders, and you kind of change that entire value incentive and kind of go push it further toward that vision of long-term reliable yield. And obviously a big point of reliability and sustainability is locking up a bunch of PolyCUB. So what you essentially want to see is, you want to see a lot of PolyCUB in the actual PolyCUB pools. So like Hive PolyCUB, PolyCUB BTC, PolyCUB ETH, you want to see a lot of liquidity there. Then you also want to see a lot of PolyCUB get locked up, and see it in that vexPOLYCUB contract where now the circulating supply of PolyCUB is super low, but you still have a lot of liquidity. So this is kind of creating an interesting incentive model in the long run, which is basically that cash flow life is returned to people who support the platform, either by providing liquidity or locking up their vexPOLYCUB for a long period of time. Because vexPOLYCUB is useful, but since you're not locking it up, it doesn't have as much value to the platform. And this goes to that larger narrative that everything we're looking at now is all about driving value to the protocol. So that's kind of something I've been toying with, and obviously it'll go to a governance vote if and when we kind of put up a proposal for it.
All right. So, I mean, you're mentioning a lot of new features. So then the question is when? When do we get bonds? When do we get governance UI? When do we get just soon? Just soon. Okay.
When
All the soons. And then
So,
Have a soon for every when.
complete sidebar, because hashtag ADHD, for all of the Leo Lions out there, and for the people that are trying to spread the word, and for the future ambassadors that I believe are coming, legit, wherever you live, especially if it's in the United States, just go on Meetup and like search crypto or Bitcoin, and oh my God, events. Like, I know South Florida is like kind of like crypto heaven, so to speak, in terms of events, but like I can go to 3 events this week if I wanted to. Like, so if you want to get the Leo Finance word out there, there's definitely local events wherever you live, especially in the United States. So get out there, be social, and wear your Leo pride, and bless people with access to Web3 Leo Finance, because all it is value add. Costs them nothing and just adds value to their life. So random call to action for the Leo Lions.
well, it's not so random, So, Cal, there were a couple tweets out or announcements about the communities pages that we talked about last Thursday. Like I didn't even really understand what you were talking about. So what's the update with community pages?
Yeah, so I actually we just put up an update right before we jumped on here. I just linked it in chat. The community pages feature is a lot. We kind of did an interesting thing with the community pages, which is we didn't just go for releasing a new feature with community pages. We went for an entirely new Lightning update, which we did for a few reasons. It was an attempt at killing 2 birds with 1 stone, because the Lightning database that we've got needed to be updated, basically to support a bunch of different things like the mobile app. And kind of doing all of this stuff at once is what led to, kind of like this cascading number of issues that needed to be solved. And we released it. So we had it in basically a private alpha for a little while, tested it, and things looked fine. Then we released it to production last week, and we did our launch party on Thursday. And then, obviously the community dug up a bunch of different bugs, basically in that release. So we were basically patching the bugs as fast as we could, and trying to make it, basically just trying to get all the updates pushed out as fast as possible. And pushing things into production definitely helps us, because you can keep things in a closed alpha environment with 5 to 10 people testing it. And there's plenty of things that can't get discovered in that type of environment. But then when you push it live to 600 people, then you've got a whole new environment, and you're basically throwing it into the fire and seeing what happens. So when we released it to production, we found probably 20 or 30 bugs, all sorts of things like Lightning comments weren't working. So like you would comment and it wouldn't show up right away. So editing posts didn't work. At one point, Lightning actually fully broke, and then you couldn't even publish a post. So there's all sorts of issues that we found. We basically collected all those bug reports for a couple of days, and then as of yesterday, we decided to take down the update and roll back LeoFinance.io to before the community pages update. So doing that kind of lets us, it lets the user base basically use LeoFinance without any disruption. And then we rolled it back to the open alpha UI, which I'll link here. And on this open alpha UI, you can still use community pages and basically test all the other features of LeoFinance. So if you basically, if you want to help us, go use the alpha UI and do all your normal LeoFinance activities. And if you find any bugs, open a bug report ticket in Discord, because then we can fix everything. I think that we have almost all, if not all, bugs already kind of indexed, and we're working on them. But obviously there can always be more. That's one thing you'll never have a shortage of, is bugs. So this, and I talked about it in more detail in the post, but this release had a lot of complexities to it, especially because of Lightning and all the stuff that we were trying to achieve at the same time. But yeah, I think we're probably a few days away from just re-releasing community pages. But I didn't want to see, the breaking point for me was when I saw that people couldn't even publish a post because of Lightning, kind of going off and on. And that's when I kind of just decided we should roll back and then redeploy it after we fix a bunch of things with Lightning. So yeah, the current status is we're fixing the current list of bugs, which is, let's see how many we got. I think we got like 6 or 7 on our list that are left. So things like, overriding fake comments, that basically Lightning puts up a comment faster than the Hive blockchain can index it. And that's what gives you that Lightning user experience. So we've got an issue right now with that. And then publishing posts is kind of having an issue kind of along the same lines where Lightning isn't pushing the post to the Hive blockchain correctly. And then all sorts of stuff with refreshing pages and kind of scalability in general, which is obviously an issue when you've got it on the production interface. So fixing that stuff in the alpha UI and then pushing it back into production, I think, is where we're at. And if you want to make it smoother for us, obviously using the alpha UI and reporting anything else that we might have missed is a big help.
And I'm just going to be the pessimist here and say that there's going to be a couple cycles of that. So
There definitely could be.
You get a bunch of bugs, take it back, fix them, redeploy. Oh, there's new bugs, take it back, and eventually you'll reach some kind of steady state.
Yeah.
But I would say let's not expect everything to be perfect on the first round.
Yeah, that's the fun part about developing is that you get new features and things that are exciting, but the hard part about developing is that as soon as something gets released, you can release it into a private alpha and have a few people test it and it looks great. As soon as you release that to a lot of people at once, you get way more volume in terms of usage of the system, and that kind of creates all these cascading failures that can lead to the discovery of bugs. And then you gotta triage all those bugs and figure out, basically take all the bug reports, categorize them and prioritize them, and then start working on them. And if you're doing that on a site that is live to like I said, 600 people that use it every single day, and then all the readers that come in from Google, that's not like a great user experience to go to the UI and find that you can't publish a post randomly, or comments are taking forever to load. So this kind of release and rollback is a pretty common thing in software. It's even more common to have kind of alpha and beta versions of the UI, which we've always had. But the problem is that a lot of people tend not to use them and not want to provide bug reports. So I think at some point it would be nice to have a little like a bug bounty fund where on the alpha UI we release all the features and then people can test them and earn a bounty if they report something and we fix it. At some point in the future, I think we'll do that. And that is kind of when you'll see LeoFinance not exit the live beta. We're doing it live phase, but go into a little bit more of a sophisticated, we're doing it live phase. That's kind of our long-term roadmap for that.
Gotcha. I'm looking forward to it.
Yeah.
I was just looking at the stats on the Simple Analytics. Got 74,000 visitors over the last 30 days. I don't know if Simple Stats has like unique visitors or if those are just total. But that's a bunch of people. So yeah, they definitely need to have an experience that's pleasant.
Right.
Yeah, experience that has them come back, because first visit, I mean, that's the way it is now. You have basically less than a minute to not lose that person. So if they come to a site and they're waiting 30 seconds for something to load and or something doesn't work, and that's the first time they've been to that site, basically, bye, Felicia. Not going to see them again.
It's true.
It is sad, but
I've
true.
done. I mean, I've done that to plenty of places. Like if it takes too long to load, I didn't care that much.
I do that shit all the time as
If,
well.
you know, I click on an article and then it hits me with some crazy pop up that like I can't figure out how to close in less than a second. Gone.
Yeah, I did the same thing.
But you know,
Gone. That reminds me of an inside joke with my business partner talking about Bill Belichick. It's like gone. His status, his success for everything, just gone. As soon as something's the problem, waste no time. Gone.
waste no time. Absolutely.
Just cut the fat immediately all the time. No compassion. Gone.
Yep. I was
So
go ahead.
I was just going to talk about the Leo growth account. So we've got a nomad soul who's taken over the role of head of business development. So he's doing all sorts of initiatives, basically to grow LeoFinance and you know, basically build all sorts of on-ramp mechanisms and getting people into the community, and then also getting the community, you know, the existing community more involved. So he just started Leopower update. So obviously, you know, Hive has a hive-power update every month, and a lot of people participate in kind of this collective powering up of Hive. And it's just kind of like a fun way to encourage people to build their stake in the platform. And he's kind of designed this in an interesting way. I'll just link the post where basically there's 3 winners every month. And on the 15th, there's a Leopower update, and then you see he's got some rules there. So your total Leopower must be more than 200 and less than 20,000. So he's obviously targeting kind of like this middle class of Leo holders. And then he said you must power up at least 200 Leo on the 15th, and then also reblog the post. So just kind of spread the message out. It's kind of typical competition, you know, guidelines. And then basically there's going to be 3 winners. Each winner gets a 20,000 Leopower delegation for 3 weeks. So kind of leading up to the next Leopower update. So the whole idea here is that you do a couple of things. You encourage people to stake more Leo and build their stake in the platform. The other thing is that you're giving out a delegation to smaller accounts that have less than 20,000 Leopower, who are obviously seeking to build their stake if they're participating every month. And you're letting them build their stake faster by having access to that basically that bigger stack of Leo for 3 weeks. So it kind of builds out that middle class. I know that you know, Addicted Taskmaster and CFL closers have made, you know, all sorts of posts talking about that, you know, both related to Hive and to Leo in terms of building up that kind of like dolphin class, which is essentially, you know, not a whale, but not a minnow type of setup. So I'm really excited to see what this initiative brings on. He's done a couple other initiatives that have done, you know, super well. So I think it's going to do great things. And then the Provide Liquidity Week he just ended, where basically encourage people to provide liquidity and then kind of get like a lottery ticket. So I think he's going to do that I don't know how frequently, maybe once a month. And then the other big thing that's going on in terms of Leo growth is the ambassador program. So, you know, Mitch kind of mentioned it. The ambassador program is basically a selection of people on LeoFinance that have access to a Leo delegation, and then also, you know, kind of get like this Leo payout once a month. And basically it's headed up by a nomad soul, and they're going to do all sorts of initiatives kind of like this one, aimed at growing the platform, both within the existing user base and then obviously outside of it. So I know Neil always loves to ask, how are we when marketing for community pages and other features? So kind of a big piece of that is going to be this ambassador program, where you've got basically this selection of, say, like 10 ambassadors, and their entire mission every month is to go out and talk to other communities and talk to other people outside of LeoFinance and Hive, and bring them into LeoFinance and tell them why they should use it. So I think the combination of this ambassador program and community pages could be, kind of that killer feature with killer marketing that, if we can onboard one community and then start onboarding community members from that community, I think it'll be, you'll see that monthly active users number grow a lot. In the last Leo stats report by Dallas, I think he said there were like 650 monthly active users on LeoFinance. That's people that posted and commented. The goal is definitely to reach like 2,500 by the end of the year. So that'd be a nice close to 5x on our user base. And yeah, I think we can achieve it with the combination of this ambassador program and the community pages. I think it's definitely achievable to onboard. The thing about communities is that you onboard one community member, and then that community member, if he has a good experience on LeoFinance, now has that built-in incentive to go out and talk to the rest of his community members and say, hey, like let's build our brand over here. It's an engaged audience. They're willing to buy into the project if we make it known why it's a good project. Kind of look at like what happened with Thorchain, and then imagine a more organized rollout of that. And that's kind of the whole idea behind community pages.
I dig it. All right. Chat's been quiet today.
He's making his recap.
What? Oh yeah, I'm typing away. I was
Typing
actually,
away.
I actually had to move my mic because I saw my thing was like lighting up. I'm like, I don't want to cause clickety clack in the Discord.
Yeah, I think that's the one. Well, that's one of the downsides of my new mic for is that at least on my headset, I can definitely hear the clicky clack. But the people want better audio, so that's what I'm trying to give them.
Come on. Don't even front. It has nothing to do with better audio for the When Soon show. It was all about the Splinterland show.
Well, yeah, that's true. But everybody else gets the benefit.
Which
So,
I keep forgetting that's actually a thing. I guess because when it was on MSP, it was just like simple, just go into Discord. So
yes,
I have to,
now it's on Twitch.
yes, I need to save the link and randomly venture in.
Well, I think it's during your crypto newbies call also.
Oh, is it? Oh, well, you do it at 7?
I do it at it's 6 to 7 Eastern on
Oh
Tuesdays.
no, it's usually I'm driving back from basketball. So,
well, there you go.
but it may be raining today. So if it rains, I could always jump in and pretend that I want to learn about Splinterlands, because I'm going to pretend I'm going to start a fund, that I'm going to pretend I'm going to put money into cards and rent. When I think about like, hey, I'd like to make more money, and then I pretend I actually want to do all the work that it takes.
There is that.
The cat life's a good life. You sleep a lot, you eat, you go back to sleep, you wander around the house, you occasionally run around. I truly embraced the life of the cat.
Yeah. Knock shit off tables.
Oh, it's great.
So I've got a couple kind of moving to broader topics, especially for the clips. I've got a couple of topics. So what do you guys think of gas prices? I know we kind of talked about it a little bit. Neil mentioned something about $140 a barrel being kind of some sort of target. What do you guys think of oil prices, gas prices, what the administration is doing, and kind of what's your hot take on that?
More money makes prices go up. So I was actually listening to Bob Murphy's show. He does an economics podcast, and it was one of the recent episodes. He was saying, Bob Murphy. You don't know Bob Murphy?
I don't know Bob Murphy.
He's a big name in the Austrian economics world.
Interesting. Neil almost seemed offended that I didn't know Bob Murphy. I'm sorry. I'm sorry. Do not discount me as a economist. I will step up my game, kind sir.
All right, good. So he made the point in a recent podcast that despite all the talk about the Fed, raising rates and everything, that the balance sheet of the Fed has not really decreased at all from the beginning of the year, which I had not looked at, but looking at the chart now, that's pretty accurate. So here I'll even drop
Good, because I was about to ask for it,
a chart.
because finding it myself would take time.
Yeah, so this is the St. Louis Fed, which is their economics database, and you can pull all sorts of numbers. So this is the total assets held by the Federal Reserve, which is a proxy for the amount of money in the economy, because I don't want to go into the whole thing, but that's base money that is used as leverage by the commercial banking system in order to create money. Like if you go out and get a credit card or car loan or mortgage or whatever, that's all money created based on this balance sheet here. So since January, it was at 8.7 trillion, and now it's at 8.9 trillion, and it hit a peak of like 8.96. So it's come down slightly, but not very much. So, as long as the money that has been pumped into the economy has been kept in the economy, then there's no reason for prices to come down. And then where those prices go, like it could be in oil, it could be in cats and lithium stocks. It could the where it flows can rotate to different sectors, but the total amount is going to be fairly consistent. And that won't really change until the Fed starts actually withdrawing liquidity from the market, and that would make their balance sheet shrink. And they've done a little tiny bit, and the stock market's gone down 20% as a result. So it's I don't think it's in the cards that, especially in a midterm election that's going to be hotly contested, that they're going to really suck up the excess money in the system in order to decrease prices, energy prices, because the rest of the economy will just roll over and crumble if they did that. And I don't think they're going to punish the Democrats like that.
Yeah, I agree. And I think we might have talked a little bit about this last week, in regards to impact of raising rates versus impact of Fed balance sheet. And everyone's so focused on rates, like you said, when that has its impacts and its factors, but in the end, the balance sheet is really what's important. And they have not become a net seller. They keep talking about it, and they need to do
just
it.
talking about it has scared the shit out of people,
right? So the only thing they've done so far is they stopped buying, so to speak. And I forget the number. I actually just read an article the other day, and it showed the number from like last month in terms of what expired on their balance sheet, right? Yeah. Where basically just like loans coming to fruition, and which was still a high number, but not relative to what their balance sheet is. Like it was still like a few $1 billion or something, which is relative. That's like the equivalent of like me, like seeing $300, I guess, come off the books. So they're this sit and do, like they're in a sit and do nothing almost. It's like, all right, well, we stopped buying, but we can't sell.
Right.
And it's like, all right, what's going to come off the books? But there's a lot that could have came off the books that's not going to come off the books, especially when you look at, like, let's just say it's just their, kind of mortgage-backed securities, because with interest rates going up, now we went from everyone in the world's refinancing last year to no one's refinancing. On top of that, people are also now less likely to sell their home, which means that loan's not going away either. So they're literally just sitting there and waiting for loans that are actually expiring for the most part in terms of like the major catalyst. It's very interesting, but I agree with you, Neil, in that I don't know that they can become a net seller before the midterm elections. I mean, because if they do, it's not going to be pretty. And since right now, Democrats pretty much hold a full sweep of Congress, I just don't see how the pressure obviously isn't full force for them to just basically shut the fuck up and do nothing for like the next 3 to 4 months.
So Neil, you mentioned, just a little bit of pressure from the Fed. Stock market goes down 20%. Do you think that the market has has priced, because I think I see a big conversation right now, which is, has the market priced in, you know, Fed activities, or is it just an initial reaction before the, you know, kind of before the big major hit, which is like the actual activities that they partake in. Basically, do you think it is priced in, or do you think we have more room to go down, or do you think the market is mispricing it, and you know, the Fed walks back some stuff and market number go up?
Yeah, I think they've priced in what they expect. So basically, based on the Fed announcements that they're gonna hike, they're gonna do it at this 50 basis point chunk, you know, through the various intervals, and you know, I'm seeing more and more headlines, you know, from various media outlets talking about the same thing Kat's been talking about, how September they're gonna turn around, and if not lower rates, at least, you know, maintain. So I think that is the scenario that the market is looking at, and you know, going from, you know, 0% up to, you know, 1.5 or 2% is kind of what this whole recent market move has been about. And then if and when that scenario ends up being falsified and the Fed does something different than expected, then we'll see a market reaction. So if they back off sooner, market will go up. If they accelerate into you know, one scenario that I'm definitely not expecting is, okay, so they get through November, the election happens, whatever it is, you know, positive or negative for either party, and then the Fed starts to put the screws to people and actually shrink their balance sheet, crashing the market. You know, that will definitely have you know, a negative impact on markets, but it will also, you know, tame inflation. You know, that's what Volcker did in the early 80s. You know, they jacked up rates to, you know, 21%, and you know, had a 2-year recession out of it. But you know, it got all the 70s stagflation, you know, dealt with. So I don't think this Fed is going to do that, but you know, they might roll off, you know, $1 trillion worth of balance sheet money, and then you know, the market would react really negatively to that. But you know, who knows? But I guess to answer your question, I think the current expectations are priced in, and then, you know, if it changes, then the market will change.
And just for, you know, I see a lot of people talking about, you know, there's because now I think everybody's talking about the inflation conversation. Like, you see it, you see like the everyday person just kind of talking about it, which is unusual. You know, if you talk to them about, you know, 5 years ago, they had no idea what was going on with stocks, crypto, inflation. So for people that might not know, what would you define as, you know, hyperinflation, you know, deflationary environments, and then, you know, a lot of people are throwing around stagflation, and I think a lot of people don't know. So how would you kind of define those environments, and what do you think we're in now?
Yeah, so inflation is, it depends on who you talk to, because people have different definitions. So I keep the very old-fashioned definition of inflation of being related to the money supply, but what most people think of as inflation as being an increase in the general price level of goods and services. So like so Kat has this fund that he's thinking about getting off the ground. He's talking to these lawyers. I gave him the name of the lawyer that I used to set up the Splinterlands fund of an syndicate, and apparently the lawyer's price from November has gone up 50% to now. And some of that is just going to be, some of that's just going to be demand, but also some of it's just, you know, prices are higher now than it was, you know, 7 months ago, 8 months ago. So inflation, most people consider just to be rising prices. Hyperinflation is one of these, you know, no clear definition terms where most people just mean very high, where you're looking at month over month kind of numbers instead of year over year. So, you know, when we talk about inflation being like 8.2%, we're talking year over year, you know, from March of 2021 to March of 2022. Hyperinflation, that kind of environment, you're talking about, like, well, you know, the price of bread was $3 last month and now it's $3.50. That's a noticeable change. So, you know, your attention span has narrowed down because the inflation is so high that you have to. And eventually that ends up with what's called a crack up boom, where inflation is so high that you want to spend your inflating currency so quickly that you'll buy up anything, just anything that has, a stable-ish value, because your money is losing value so rapidly. It might be different day to day. Like, there have been cases like in, I think it was in Venezuela recently, that people were getting paid at lunchtime every day. And so they would go out and they would buy whatever they could find. And because the next day when they got paid, they would be able to buy less. So, when you're in that kind of environment, then you're talking hyperinflation. I've always looked at it as, so, the federal government has a debt owed to various parties, right? A lot of it goes to the Federal Reserve. Some of it goes to individual bondholders, like, anybody could buy a U.S. Treasury bond. Some of it goes to other countries that have bought up bonds, and the federal government generates revenue from taxes and from fees and tariffs and all that kind of stuff. So, to my mind, when the revenue cannot pay even the interest on the bonds, then you're in a hyperinflationary scenario that's a downward spiral, because there is no escape from that without default. But again, different people look at hyperinflation differently. Stagflation is a scenario where, for a long time, it was believed that you had to choose, in terms of macroeconomics, you had to choose between inflation and jobs, essentially economic output, so that, as you tuned up one, you got more of the other. And so it was thought until the 70s, basically, that you could not have high inflation and a weak job market at the same time. And then that was proven to be false, because you can. So stagflation is when the economy is stagnant, not growing, and you have high monetary inflation. So prices are rising and all that kind of stuff, but the overall economic productivity is not participating in that rise in prices. So it's just getting more and more painful to, operate in the economy. And, we can see that's kind of the environment that we're in now, where we have appreciable, inflation, 8% or whatever, and real GDP growth is way, way below that. So we are having basically a shrinking economy and inflation at the same time.
Doesn't sound good.
Doesn't sound good. Not pleasant.
No. And, stagflation has been talked about a lot. Like, there's one economic newsletter I've read. I should say I've read, because I don't always keep up with it, but it's been 20 years now. And on and off, he's talked about stagflation a lot. And it's like, we never really got it. But I think it was just a matter of time. But something I found really interesting was, they kind of deep dive in terms of research and debt levels relative to other countries. And Neil mentioned where, like, the revenue doesn't even cover the interest payments, so to speak, to put it in like layman's terms, right? And basically what they came up with on their analysis was like, everyone thinks it's way worse than it actually is. Sadly, we can continue probably at the rate we're going in terms of debt creation until the end of this decade, almost, before it really blows up and we get to that point where the ratio is so out of hand, and on the level of some like European countries that are already there. And that was, to me, baffling, and actually shifted my mindset from being way less bearish, so to speak, in just terms of the overall increase of potential prices, which, we've seen over the last, because that came out, I think it was in 2020, they came out with that. I mean, and just look at the last 2 years of debt fueled growth. And, when does it end? I don't know. Maybe, the inflation puts the brakes on it for a while and there's a little pain for a year or two, but think about it. We suffer for a year or two, maybe, right? But as soon as they can basically turn the faucet back on, they're going to, because it's the only option they have. And they can, because
that's the only thing the Fed does is,
yeah,
money printer on, money printer off, and then all the rest is noise.
And we're still
not to burr.
Yes, exactly. And we're still not near that point where that, debt to revenue ratio is quote unquote a problem. It looks ugly now, but it doesn't outpace. Yeah, it doesn't outpace. I forget exactly what the numbers were too. I wish I could recall what, I mean, obviously it's a couple of years ago, but yeah, there was a lot. Just put it this way, there was a lot of room to go still. Like, I think it was like, I don't know, maybe like a third or something, in terms of the percentage. So we could still 3x. At this point, it's probably half because the last 2 years have been insanity.
Yeah. And it's funny, obviously doing taxes, I deal with a lot of people's financial information, and 2021 was the best year for a lot of people, money wise. And now we're seeing that, oh well, that those the flip side of that is coming in the form of all that inflation and kind of a weakening job market. The Fed had in one of their speeches recently said that, well, unemployment's at like 3 point whatever percent, using their kind of gimmick numbers where we don't count people who are just chilling doing nothing. And we could increase unemployment to like 5% and it'd be okay. So they're kind of setting that expectation that the job market's going to get worse, and that is by design, because they are trying to battle inflation and manage a soft landing, as they call it, which is going to fail. Nifty Phil says, when recession? Let's say we are probably in recession right now. We won't know till later, but in the old days, it was 2 quarters of GDP shrinkage, 2 consecutive quarters made a recession, and now they have a board, because it's the government, and they decide when we are officially in recessions or not. And it's always like after the fact. They'll say, "Oh yeah, those 4 months back there, those were recession." But you can see on the chart that was from that link paste that Cal put in, those gray areas are recession. So that COVID recession lasted 3 months apparently. But try ordering stuff. Let's see if that's still true.
So speaking of recession and inflation, where do you guys think, where is your preferred safe haven? And I think obviously, given that we're on crypto, it's going to be probably skewed a certain way, but starting with you, Mitch, where's your safe haven for inflation and numbers go down?
Honestly, right now, I don't have conviction in whatever my answer is. Historically, real estate's been a pretty good play, and obviously I have a chunk of exposure to that. But yeah, it's probably more of the same for me, just real estate and crypto. I don't know if I really look at, I mean, I know it still is, but gold, I'm just not excited about. I own some gold and silver. I don't plan on getting rid of it, but I also haven't bought any more gold and silver in probably 3 years. And I have no intentions of buying anymore. So I'll probably personally just stick with real estate and crypto, which is also why of late, the only thing I've purchased on this dip has been Bitcoin. I haven't added to any alts yet. And I don't plan to unless we get another leg down. So yeah.
Yes. Senor Coconut says homesteading skills is his recession haven. That's solid if you can do it.
True.
Providing for your own lifestyle on a very basic level is pretty helpful. I agree. Gold has not been, it's basically doubled from a decade ago, which is decent, but it's been outperformed by pretty much everything. So, and we've had inflation during that time. So, it's, I guess the promise as an inflation hedge, I think, is not really held up as well, at least in this medium term time frame. You could argue that over like 100 years it holds up. It's like, okay, that doesn't actually help me.
Actually, could you know what I've never looked at? I'd like actually to look at what the performance of gold since 1971, because inflation is like 2000% over the last 50 years.
Yeah.
So
yeah, it's worth looking at.
Fact. Go and double check what
Check
that
the
exact.
charts.
Well,
the trick is getting the data.
Yeah, well, not so much gold. I just want to double check on the rate of inflation since
Uh,
1971.
Yeah, there's that
What is
CPI
that short
calculators
horizon?
and stuff. But for me, inflation, I basically it's LPing USD against Bitcoin. It gives me that middle ground hybrid position that I like a lot.
It's
And
not a bad play.
I've been waiting, with this whole Bitcoin market that's been 29.32, 29.32, 29.32. I've been waiting for it to hit 27. I've got orders in, I've got them ready. Um, but I don't, but maybe the support holds and 29 is it. Um, in which case, I've been thinking about starting to dollar cost average into liquidity pool positions. Um, so that, if it does fall, my fall is mitigated because of the LP dynamics, by square root of behavior. And if it does rise, I've at least caught some of the bottom. I've bought a little bit here and there of Bitcoin, but I still have a large chunk of USDC just sitting there waiting. So
Wait, hold on. So maybe something's not clicking in my brain because if you're LPing and
uh-huh.
let's just say it's Bitcoin USDC
Yep.
and Bitcoin's going down,
Yes.
that I guess you're dollar cost averaging in a way, so that maybe makes it sort of a better scenario. But in the end, you're actually getting more exposure to Bitcoin as it goes down.
That is correct. But the money, the Bitcoin I bought, higher is still losing money. It's just losing money at a square root pace compared to
It's
the
being
spot
diluted,
price.
so to speak. Yeah, because
Yeah.
you're buying more.
Yeah. Uh, so by dollar cost averaging into that, you're kind of getting like a double averaging smoothing effect.
No, it
Um,
makes sense. And it puts it on autopilot for you
yeah.
and you're
Yeah.
getting yield.
So I've been toying with that idea. I haven't pulled the trigger on that. I still have my stash of cash there waiting, because it's like, well, what if I'm wrong and it falls to 21,000, and then I could have bought all those more Bitcoin, So
True, true.
So
That's
Neil, map
actually
that out for for people. If they put $1,000, let's say compare putting $1,000 just straight up into Bitcoin, dollar cost averaging, say over a month's time, versus $1,000 dollar cost averaging into an LP position. What does that look like if Bitcoin goes down to 21? What does it look like if Bitcoin goes up to 39?
right. If if I buy Bitcoin straight out and it falls to 21, now I've lost a third of my value, right? My 1,000 is now worth 700, let's say. If I take that 1,000 and put it into an LP and it falls to 21, I don't lose 30%. I lose the square root of 30%, which is going to be like 11% or something like that. The math gets slightly complicated, especially if you're DCAing into the whole thing. Um, so my position value will be higher than it would have been if I just bought Bitcoin straight, because you have that internal balancing act that happens inside an LP. On the flip side, if Bitcoin rises, it goes from let's call it 30 to 40, it would have gone up by a third, and my LP position would have increased by the square root of that. So would have gone up, that same 11% or whatever. So the having a stable coin against Bitcoin just reduces overall volatility of your Bitcoin exposure. And you paid for that on the upside by getting less gains, but you save it on the downside by having less losses. And then there's additional factors where if you're yield farming with that, you're increasing your internal returns, which is making that spread even more positive. So if in the dropping scenario, you're dropping even less as you add to your position through yield farming. And then as you dollar cost average, well, that creates, effectively what that creates is multiple positions, and how each one gets mark to market with wherever the market ends up is going to be independent. But you're able to blend all those positions into one and get an overall average that is going to be less volatile. So it's not a simple scenario basically, but you're you're gaining reduced volatility at the expense of potential performance.
The only scenario to not do it is if you are 100% positive that Bitcoin is going to double tomorrow.
Right. Yeah. If you're super bullish and you're convicted that this is the bottom, then just go all in straight up.
Yep.
I'm not in that case.
What I've learned in this last 2 minutes is that the Bitcoin that I recently bought and then I plowed into the single stake Bitcoin pool on Cub DeFi, I should pull out immediately.
Maybe.
And pair it up against some USDC. The only problem with that is I'd have to take it off Cub DeFi because what do I got? You got Bitcoin BUSD, I think, on PancakeSwap. So, well,
yeah,
the closest
there's
option.
Bitcoin pairs everywhere, you know.
Yeah, the closest option as far as on POLYCUB is the Try Crypto with Ethereum, Bitcoin, and USDC.
Yeah, how's the yield on that these days?
I have not looked for a
Pretty
while.
solid. I'm still in there.
24%.
Yeah, well, I mean, you know what the thing is too, honestly, like maybe if I end up buying more Bitcoin, if we go down, or maybe I'll just set up a pool now so I don't even have to pay attention to it. But what I've already purchased in like this past few weeks or whatever it was, I wanted more Bitcoin exposure. That's just gonna sit in the single stake pool, earn its little yield, and I can ride or die Bitcoin up and down.
Yep.
But
You know, I was reading an article about Paul Tudor Jones recently, and so he's for those who don't know, he's a pretty legendary fund manager.
dude's still alive.
Oh yeah. So he's been around since like the 70s as far as like a fund manager, and he's basically he's unique in that he's made money like every year and has had like almost no drawdowns, which is phenomenal in the money management space, because a lot of guys, you know, they'll make money some years, it'll be great, and then other years they lose money, and you know, you end up maybe even, maybe better, maybe worse, but you know, Jones has done a remarkable job over a very long time period of making money consistently. You know, years will be bigger than others, but overall making money. And you know, his thing was basically, you know, Warren Buffett's, you know, quote is like, you know, rule number one is don't lose money. So so you know, I've been thinking about that lately. It's like, well, if I want crypto exposure and I want to not lose money, what do I do? And you know, crypto is such a volatile beast that it's hard to know what to do. So I mean, there are these volatility mitigation strategies like LP positions and yield farming and that kind of stuff. But even so, it's hard because we really don't know where the market's going. And you know, in stocks and equities, or equities and bonds and commodities, there's a lot of different stuff going on, but crypto is all tightly correlated with each other. You know, if Bitcoin falls, the rest of the market's falling. If Bitcoin rises, chances are the rest of the market's rising. So there's kind of like a only crypto on off and very little alpha outside of that. Unless you're talking micro caps, like you know, POLYCUB, you know, sitting right at 20 cents right now. It's been up from how low did it get? Like 12 cents, 13 cents, something like
13,
that.
something like that. Yeah.
Yeah, and that's driven because it's such a micro cap that, you know, a couple players can move things around, and people buying, you know, some POLYCUB for governance voting is enough to raise the pricing and keep it there so far. So that's not so tightly correlated to the rest of the crypto market. But anything beyond that, like your Bitcoins, your Ethereums, your Solanas, your BNBs, your well, Luna's its a whole other thing, you know, in a negative sense. So all of those pretty much move together. Some, you know, are more extreme than others. They have higher beta, but they're all going to be following the same trend lines. So with that environment, it's hard to pick just, you know, a winners or at least not losers without, you know, taking on the volatility of everything else. But as far as I'm aware, LPs are kind of the best place to do that, to get some sort of hybrid solution. Nifty Phil saying POLYCUB WETH is the place to be. I'm in POLYCUB WETH, I think.
Oh
no,
I don't think
I am not
am.
anymore. I moved it over. I'm now in P-Hive Polycub because of that governance vote.
I did not move anything because of the governance vote, but I am in
Yeah.
P-Hive Polycub.
Polycub WETH is paying 113% right now. Not bad. I'm interested to see how the price responds once the 30 days after the switch changes, because so many people have done the same thing I did, where they were taking the penalties early on, up until we had that switch, and now we're just waiting because 30 days is not so long, 90 days is too long, and so I think we'll see a lot of liquidity come onto the market, and a good chunk of it will sell. Some of it will go into governance, some of it will go into farms. But yeah, expect some selling pressure once that happens.
Well, we have when did we have that governance vote? April 28th. So we are almost what are we, a week and a half in?
April 28th?
April 28th.
So then when did the actual change happen?
Let's see. April 29th.
Yeah. So I must have waited longer than I thought to start harvesting. Because that's more than 30 days.
Yep, we are
That doesn't-
well past 30 days.
Interesting.
Let me look at my wallet in Polygon.
Because here was the countdown for it. So we're 10 days over. It's been 40 days.
All right. So if I go to ERC20 transactions. Oh, it looks like I started this wallet 20 days ago. All right. 10 days to go for me. All right. In that case, the price performance has been even better than I thought.
Yeah, I mean, I think I think we saw a dip right at 30 days, which was 10 days ago. We saw a dip. Let's see if I can confirm that or not. So today is the 7th. So that would have been like May 29th-ish. Yeah, on May 29th. On May 27th, we were 15, 16 cents. May 27th, we went up to 18 cents. That's kind of when we released the governance voting too. So then we hovered at 18 cents, and we've just kind of been steadily rising since then.
Gotcha. All right.
So
well, that's good to hear.
Yeah.
Interesting. Did you guys see the Leo Power Up Day insurance bad luck prize that post that one alpha put out?
I did.
That's pretty interesting.
Where is he at?
That's pretty cool.
I got it in my show notes here. My notes for the podcast.
Power Update insurance.
Yeah, I just stumbled across it. So basically 60,000 Leo delegation for 3 weeks for basically someone that's unlucky over the 3 months. So if they participate in the Leo Power Up Day, June, July, August, and meet all the qualifications, but don't get lucky enough to be one of the 6 prizes for all 3 months, which maybe someone will fall into that category. And then they can win this.
Depends on how much competition there is, right?
This is true. And then he's got obviously criteria that also, other criteria that has to be met. Can't power down, obviously, in any of those months. And need to do a post about the Leo Power Up Day, at least one Leo Power Day post each one of those months. Interesting stuff. I've been on my own power up journey for a while, and I am, in fact, let me look at my wallet. Maybe I'm hitting it live. That would be cool. Nope, I am not. So close. So I've just been organically powering up from my curation rewards and my posting rewards, which haven't been as much of late because I haven't been posting every day the last two and a half weeks. But I wanted to get to 50,000 Leopower, and I am 109 away. Yes. And then once I get to the 50, then I'm gonna start taking my liquid tokens and doing other things with them, like
at you.
probably putting them into LPs. Maybe I'll add to my P-Leo and B-Leo pools.
There you go. Yeah, I have gotten, so ever since I bought Leo miners way back when, I've gotten super lazy with Leo power up just because you know, it just comes in. I don't have to do anything. So,
Fucking damn miners. Oh my God. I haven't thought about miners in a long time. Now I'm having PSTD or whatever. I can't even use the acronym.
yeah. So
Freaking miners.
so yeah, I haven't paid a whole lot of attention to it. And you know, I when Cub DeFi launched, I sacrificed most of my Leo stake to go into that, which was a good decision. It turned out.
Oh yeah, I did that as well. I did that even
Uh,
with PolyCub. I put a good chunk into P-Leo.
Yeah. So it looks like I have 1,000 liquid, so I'll power up 1,000.
Look
Is
at
today
you.
power up day, or do I have to wait till the 15th?
That's a good question. I don't know if you have to wait until the 15th and do it on that day, or if you can do it throughout the month.
Now that I know Neil has all that liquid Leo, I'm gonna hit him with the please sir DM. Please sir, 191 Leo. I mean 109 Leo.
You know what?
Actually,
you know
it's
what,
less. I'm about to power up 30, so I'm less than 100 away. I'm like 80.
All right.
I'm gonna be like 80 away.
All right.
Yeah, you need to
I'm
power up on power up day. So that's the 15th.
It's all right. Here's 85 Leo for you.
All right, totally kidding, but hell yeah, thank you very much. That puts me over, yeah, because I'm at 49,921 right now after powering up the 30 liquid I had.
There you go. You should see it in your wallet.
Love it. Well, so and much appreciated, sir. So what's funny is I know my soul had hit me up asking me about if I wanted to participate in the Leo Power Up Day thing in terms of like adding additional delegation or providing like just any liquid Leo as a prize. And I was like, honestly, obviously I'm always down to help the cause. I was like, my game plan was to get to my 50K. And then after that, anything I was earning, I was going to, plow into LPs. I was like, but next month I can take, whatever earnings I have over 50K and just potentially delegate it or do some kind of liquid rewards towards it instead of adding to my LP. So take one for the team. But yeah, I wasn't down for this month because I'm like, gotta hit my 50K.
Yeah. Yeah. And what's up says it has to be on the 15th. So
You gotta wait 8 days. So really, like someone could just
Woo's almost there too, but that's way more than
oh yeah,
80.
look at that.
I can't spend the 900.
Me and Woo are in a race.
But
Let's see what I'll be over. I can donate
Uh,
my overage to Woo, which is only gonna probably be like 9 Leo.
yeah.
But hey,
Who
Yeah.
wants to hit it?
Yeah. So on the 15th, I'll power up 1,000 Leo. That'll bring me to 3,000.
well, so that was my point though. Like, so now, like in a way, well, hold on. Also, is there a qualification in terms of how much Leo power you have, or can anyone, like, can whales
It's at
technically?
200 to 20,000.
Yeah, can't be over 20,000.
Oh, okay. So I can't even. I was gonna say, but let's just say someone that's got like 15,000, right, and they earn maybe decent on their rewards. Like, obviously, you can, gameplay that and just let liquid stack all month, and then power up day, boom, one shot. I like it. Gamifies it.
Yeah. But I'll wait till the 15th, and it's gonna be the 15th every month. Is that the plan?
Yep, 15th every month. Kind of goes well with the high power up day, which is on the 1st of every month.
Oh hell yeah! There it is.
Wow.
6.942 Leo power. I'm gonna send to Woo. That's the overage. Actually, I'm a dumbass. I can't send it to her because I powered up the overage.
You
Oops.
can delegate.
I could delegate. Now I'll just wait for curation rewards or some shit to hit this afternoon. I always have 3, 4, 5, 6 trickling in on the regular over the
Yeah.
course of a day. 1.2. I get like 1.2, 0.6, like pretty much trickling constantly throughout the day from
Yeah.
all the voting.
Nifty
I
Phil
get
is
a-
only 45K away from reaching you guys.
So close. Closer than
So
I am.
close.
1, 2, 3, 4, 5,
Yeah.
6, 7, 8.
Well, I mean, this is for me. It's been so how long Leo Finance? I mean, what are we 3 years deep now?
July 2019. So yeah,
Yeah.
almost
So
coming
we're
up on
coming
3-year
up.
anniversary.
Yeah, we're coming up. So I mean, you know, I've bought Leo a handful of times, but not much of that got powered up. Usually when I was buying Leo, it was for B Leo and P Leo. So this has been basically it's been a 3-year grind in terms of just curating and posting from my starting point, which I think was like maybe I don't even know if it was 2000. It was more than 1,000, but I got to remember what that initial airdrop was. I know it wasn't 10,000 because I wasn't an official moderator for PAL.
It was like
It
50,000.
was
or
that, yeah,
something.
that was a lot. It was a lot.
Oh, it was
like
more than
30
that.
something.
Wow.
It was too
let's
much.
not talk about all the mistakes Cat has made. Was a moderator, but just pretty much wasn't an official one because he didn't want a job title. Hashtag mistake because huge Leo airdrop at the beginning. Didn't buy miners because who knows why the fuck he didn't buy miners and just watches Neil and Rollin print Leo constantly. So let's not talk about the poor
I
decisions.
didn't buy as much as I wanted to, if that makes you feel better.
It doesn't make me feel better.
I literally forgot I had money on an exchange sitting there. I had some Steam, and I could have bought out like the rest of the miners when Roland was talking about it, and I just bought a little sliver instead. But
There it is, 3 years ago, baby. Steam Leo.
New Scott tribe on the block.
July
Scott
3rd.
tribe.
We'll
Wow,
have to
remember
do
we used to
something
talk
fun.
people used to talk about Scott bot.
Scottbot still handles all the transfers.
Yep.
Yeah.
And it mostly
Yeah.
works.
Honestly, that's good that it came up though, because yeah, next month probably should do some kind of 3-year anniversary.
Ooh.
Maybe have a
So-
little party.
You know, I think I'm gonna channel my inner Trump man and say, all right, Cal, it's been 3 years. Why am I not Lambo yet?
Yeah, one Lambo.
Wait, I know why. I wasn't a moderator and I forgot to buy miners.
And Lambos are terrible
Hashtag-
cars. So
My fault. Oh yeah, I don't want a Lambo at all. I would never buy a Lambo.
Gotta get yourself a TRX.
yeah,
I just
my,
want
my new aspirational vehicle is a Ford Lightning.
to. Okay. No, my like frivolous FU money is Model S Plaid Edition. Because that thing, like full blown, you're spending like at least 130.
Who's getting a taco truck?
That's a great idea too. It's the gift that keeps on giving.
That's right. As long as you're willing to do some work or have somebody do the work.
Nope, just hire someone. Nice. We can have a Leo Fest and Wu can have the taco truck outside the venue.
There you go.
Leo taco truck. There you go.
Oh, man. All
Stud.
right. Well, it is 2:00.
It
Yeah.
is.
Streaming for a while
It's
now.
time to go. The recap
we
post has
should.
been actually finished for 10 minutes because I'm like, well, I don't need to recap the randomness now. So hold on. I'm dropping that into AMA chat now.
Before
At
we
least I
drop
think I
off
am.
to
Before I
let's change it up for the little exit that we usually do. Instead of me giving a recap, why don't you guys give a teaser for your shows? So Mitch's crypto newbie call and Neil's Splinterland show. Give us a little alpha and a teaser and when your show is.
Go ahead, Mr. Neil.
All right. We got the Monster Maverick show. That is Tuesdays at 6 p.m. Eastern. You can go to splinterlands.tv. It'll show you the schedule in your local time zone. So you'll see my show in the list there for whatever time zone that you are in. And that is the show all about Splinterlands, but from the financial kind of side of things. So Today's episode or tonight's episode is going to be a little bit dramatic because I'm going to be making some moves, some dramatic moves. At least, dramatic for me. There's not going to be any dancing or anything, but we're gonna move some numbers around, and we'll see how people react to that. I've been kind of banging the drum on some opportunities in the Splinterlands world for the last few weeks, and nobody's been listening to me because the numbers have not demonstrated that. So if you want to make some money in Splinterlands, tune in.
Rock and roll.
And
I'm sorry, I'm
Mitch?
distracted by the AMA chat here. There's all sorts of chatter going on. I do a crypto newbie call, and that's really what it is. It is for the noobs. So if you know any normies that need to learn the basics about crypto, send them my way, and I'll get them at least versed enough where they can venture over to LeoFinance and not feel completely lost. 7 p.m. every Tuesday, 7 p.m. Eastern. It's a free 30-minute Zoom call, and do 15 minutes of Q&A and 15 minutes of teaching. So send your normies over and we'll get them schooled up.
And how do you get to it? What's the link?
Oh, yeah, let me drop. Just go to my website. They can plug in their email and they automatically get the Zoom link sent to them.
scarycatguide.com/crypto-call. I like it.
Indeed.
I like it. And my plug is get ready for LeoMobile V1.
There you go.
Awesome.
Earn your first crypto in less than 5 minutes.
So you're just waiting on approval, or
We just finished all the mock-ups and all the marketing material, and now we're just going to submit it to iOS and Google Play, and then we'll be waiting for approval. It shouldn't be too long though, since we're already in test flight.
very cool.
I
like the app a lot.
I gotta actually try
Use it
it
a lot.
again. I gotta try and reinstall and see if it'll work for me. I haven't tried in a few weeks now. What is Rule referring to with Taskmaster wants Leo to make 10,000 comments, and then you said you're gonna contribute?
We do every week. We do about, I haven't pulled up ABH's post lately, but every week we do about like 8,000 to 8,500 comments.
In all of LeoFinance?
Yeah, all just from the UI and from the mobile app. So leofinance.io and the mobile app, we always do about 8,500 comments ish. See if what I can pull up last week.
Gotcha.
Last
All
week we
right.
did 8,200. So our goal has been to get to 10K. So
I will do some commenting this week. I openly admit I am not great about commenting on posts and or responding to comments on posts. So
yeah, we got
even responding
3
on
days.
comments.
So until Friday morning. So technically today, Wednesday, Thursday, 3 days to get
That's
to
like the
10K.
month end, so to speak.
Yeah, the week's end every Friday morning, Eastern time.
Oh, this is for the week.
Yeah, 10,000 a week.
Oh, nice.
Yeah, we do a lot of comments.
Do it now.
Do it.
Comment.
You know what? I'll do
Down.
this. Anyone who we're gonna get to 10,000 this week, I'm gonna do as many as I can. Anyone who beats me this week, because I give 100 Leo to anyone who beats me every week in terms of how many comments you do on Asher's engagement posts. If you beat me this week and we hit 10,000 comments, I'll send you 250 Leo instead of 100.
Boom. Mic drop.
Love it.
Well, if you're already out there commenting this week, you're already in the game. So I don't know if I can play catch up with 3 days left.
10,000 is a lot,
It's a lot.
especially for a small community.
I mean, I could spend the next 3 days all day long just commenting, but is that worth 250 Leo? Maybe
depends.
in the future when
It's
Leo
gonna make
moons.
that Leo more valuable. So
Well,
Exactly.
let's say Leo goes to $1, $250. That's decent.
3 days work. I got to move to Costa Rica.
Yeah.
I like
for
it.
sure.
Get it done. Someone get that
Yep.
250 from Cal and brag about it. Come back and brag about it next week.
I'm shooting for 1,000 comments. So let's see. It's gonna take a lot of work to beat me.
I don't even know how to like, is there an easy way to check like how much I've commented?
Yeah, go to Hive Stats and then
Oh, it's on
to-
Hive Stats.
yeah, go to
Comments
Hive
even?
Stats and then go down to where it says pending author rewards, and it'll tell you. It'll show at the bottom. It'll say like two posts plus 18 comments. Right here.
First pending. Oh, there we go. All the way at the bottom.
Down a little bit.
Okay,
Yeah.
hold on. Where do I go? I'm sorry.
Hivestats.io
Yeah,
and
I'm
then your username, and then scroll down pretty much to the bottom, like in the middle of the page. It's called pending author rewards. It's right below the analytics charts. And at the bottom, it'll show you your pending rewards, but it'll say 3 posts plus 71.
Oh, there it
comments or
is.
whatever.
Yep. Yeah. No, I see it. Yeah. Post comments. Wow. I am like, this is like the least active I've probably ever been in a week since the launch of LeoFinance. I'm not even going to share how many posts and comments I have. It's embarrassing.
Anyone can look. It's on the blockchain.
I know this is true. So yes, the cat fell off. My one post a day for years finally. Well, obviously I was doing it on Steam for, what was that, 3-4 years before LeoFinance was even a thing. But rock and roll. Cool. Good stuff. All right, people, go get Cal's Leo.
Sounds like a plan.
All right.
Sweet.
So next AMA, next Tuesday. I don't know what date it's going to be. Where's the
That
calendar?
should be the 14th.
The 14th.
The 14th. Noonish in the Sooniverse.
Sounds like a plan.
See you guys there.
Alrighty.
Peace out.
See ya.